Hey everyone, welcome to our January market update. I'm Steve.
I'm James. We hope you had a great holiday season and Happy New Year.
So why don't we start with the Fed?
Again.
Comments from the Fed's December meeting released last week suggested that rates could potentially remain at restrictive levels for some time until inflation consistently drops. They did acknowledge, however, that rates had probably peaked and they would begin cutting sometime in 2024. There was definitely increased optimism among Fed members about the path of inflation, noting there had been clear progress. Meanwhile, the much anticipated CPI numbers came in this week, and it was a bit of a mixed report. It was close enough to expectations that the market reacted somewhat favorably, but it wasn't necessarily the market mover everyone had hoped for. Numbers showed inflation definitely starting to come down, although at a snail's pace. All things considered, this report was good enough to keep the Fed on course to start lowering interest rates. The more optimistic folks are hoping for cuts as soon as March. The market, however, is probably betting on that happening more towards Q2. Regardless, taming of inflation along with a still booming American employment landscape is overall great news for the Fed's goal of a soft landing.
Yeah, and consumers are starting to take notice as well. Mortgage applications to purchase a home rose 6% the first week of January, still 16% lower than the same week 1 year ago. And refinance applications jumped 19% from the previous week and were 30% higher than the same week 1 year ago. According to Fannie Mae reporting, more consumers now expect rates to go down than ever before. In fact, for the first time in the National Housing Survey's history, more homeowners believe mortgage rates will go down rather than up. However, like many in the industry, the feeling is that even if rates fall further, affordability might be tempered by elevated home prices, which is something everyone in the market is keeping a close eye
on. Real quick product spotlight. We're seeing a lot of HELOC activity. Wanted to talk just for a bit about how those can be used for a home purchase. With many buyers having a good amount of equity in their existing properties, a home equity line of credit can be somewhat of a game changer when looking for that next purchase.
That's right. A buyer can put a HELOC behind their existing first mortgage to access some of the equity that they have in their current home. And that can typically be put in place pretty easily and with minimal fees. These funds can be then used as a down payment on their next home purchase, and that is typically done when a buyer wants to close on a purchase before selling their current home, or if they plan on holding on to their current home as an investment property.
Yeah, we also have products like a bridge loan, a cross-collateral loan. These things help a buyer purchase the home before selling their current home. Reach out to us if you have questions, or this might be something that can help with a client or transaction.
Thanks for watching. We hope you have a great start to your new year.
Thanks.